Thank you very much for that kind introduction. I would like to thank the Foundation, the Hyde Foundation, and the Slovak Taxpayers Association for inviting me to come here. I've been through a lot of Central and Eastern Europe, but this is my first trip here. I'm both happy to be here and I'm sad to be here. I'm happy to be here because Slovakia was a very important country in the flat tax revolution. I'm sad to be here because there's going to be a funeral very soon for the flat tax. However, I believe that a resurrection is possible, perhaps not in 3 days, but perhaps after the next election. So never give up. I've passed out 2 sheets of paper, and let me talk a bit about them first. One of them is the best list of flat tax jurisdictions I could come up with. Now, some of these countries or jurisdictions aren't countries recognized by the world associations, except they're countries recognized by themselves. And so I've included them anyway. And for some of them, I've been able to find the exact law, translated into English, or the local language which technology helps you translate. So 1 or 2 of these may be out of date, but by and large, this is a reasonably current and comprehensive list. And as you can see, several countries from 2011 joined the list. It's very encouraging in that regard. I have a table in my office where I've been able to purchase a small flag of every country that has adopted a flat tax, and the table is absolutely full of these beautiful colored flags. Some of you, for example, might have a hard time finding Tuvalu, but they have a wonderful low flat tax. In any case, for the moment, I will have to remove the flag of the Slovak Republic and put it back in the drawer, but hopefully take it back out soon. So you can check these if you want to look up some more, but this is a good working list. The second thing is a summary of my remarks, but I live right in the middle of Silicon Valley. And therefore, as someone who lives in the middle of Silicon Valley, I believe strongly in the digital revolution and the digital disruption of traditional ways of doing business. So as part of that, I really don't give out business cards anymore. As long as you can spell my name, you can find everything you need to know about me by simply typing my name into any internet search engine. And the first thing that comes up is my biography, and it lists my publications. It lists 2 blogs I maintain, one where I update the flat tax. It has my home page. And then if you want to click on any item in there, you can continue further. So I've given you my email address in case you want to get in touch with me by email. I also maintain a blog on the flat tax. I've been doing this for a long time. I have several hundred postings, and I try to provide a chronicle of every event that affects the flat tax everywhere in the world. I ask Google to send me information every day on any time the words flat tax appear in any language in any publication. So you can maintain that. And then finally, for a long time, we have persuaded the Hoover Institution that it is a good idea to make the dissemination of this idea free of charge. So the third link will take you to the flat tax book. You can download each chapter, you can print it, and it's free of charge. So you really don't have to buy the book if you don't want to, and this makes it possible for anybody anywhere in the world to have a copy. We also have French, Italian, Spanish, and German copies online. These are both free, or you can buy the book, and these have been published by the European Center of Austrian Economics Foundation in Vaduz, Liechtenstein. And then there are other various languages which have been published but not readily available. Jan thought it might be interesting if I gave you a little bit of personal history of how the flat tax came about, and then talk after that about some general remarks. Just to kind of keep in your mind clearly why this idea is a good idea, why it's caught on around the world, and why we need to defend the idea. First, the story. Ideas come about in very strange ways. Some of them seem to have a normal course of events, and some of them come about by serendipity, by chance, by accident. You don't really expect it. Anyway, when I was 22 years old, I thought I would do something different in life, and I would learn the Chinese language. Let me just ask, 你们多少人在这里会说普通话吗？不会。你应该告诉你的孩子，你得学习中文，要不然后来你没有经济机会。And that just simply means I want to encourage each of you to have your children and grandchildren study Chinese, otherwise in the future they may not have any economic opportunity. So that would be the third language for you all to learn. Well, anyway, I also got married in Hong Kong, which was very useful because it meant I would go back. Now, while I was studying Chinese, I had occasion to look around me, and Hong Kong then had something very similar to a flat tax. Hong Kong was growing at 9% a year, and this stuck in my mind. Later, when I had my first academic appointment at the University of Rochester in New York, Milton Friedman came to visit for a day. We started talking, and we went into detail about Hong Kong, and he said, you know, you have this unique experience. Don't think about becoming a Chinese expert. Why not write about Hong Kong's free market economy and spread the idea of it being a model for economic development instead of the then socialist, communist, central planning model? And I said, okay, that sounds like a good idea. Well, the next thing that happened to me is that I had written a book in California on Proposition 13, which was the first big tax revolt against property taxes in the United States. And from that, I was asked to serve on President Reagan's tax policy task force. And we produced a 500-page report, and he came into office and the Congress enacted the 1981 tax reform. But that March, as I sat down to fill out my personal income tax, I spent 32 hours on 2 consecutive weekends. And I said to my wife, I should be an accountant, not a professor of taxation. And so I said there's a better way to do this. And I wrote a very short piece for the Wall Street Journal, which was called The Attractions of a Flat Rate Tax System. Coincidentally, Robert Hall, who was just recently the past president of the American Economic Association, came to me one day and he said, let's do it. I said, do what? He said, let's rewrite the entire US tax code. Why not? It's only 30,000 pages long. So we had lunch every day for 3 months, and at the end of the summer, we produced this 18-page paper, which was the details of a simple, integrated, basically cash flow expenditure tax, a flat tax, basically, minus an exemption for investment, with a personal allowance. And we shopped it around to various economic departments. And basically, they took the view that this was the first stage of Schumpeter's knowledge, which is, they're crazy. Nothing wrong with the idea, but this is just crazy. Everybody in the world knows you've got to have a nice graduated social market flat kind of tax system. So that was okay. But then we published our 18-page paper in 1,000 words in the Wall Street Journal, and I knew the editor. And he said, we're going to have our artists draw up a postcard. And it turns out that they did. And I actually have here with me copies of both articles. And the second article has, in the middle of it, you can't see it here, but there's a little postcard they call Form 0008. Just a postcard. That postcard set off a revolution. We had more correspondence from other academics and from business and from media than both of us had in our entire professional lives from every piece of work we had done the prior 15 to 20 years. And all of a sudden, everybody became interested in the idea. Flat tax bills were introduced by Congress from both the Democrat and Republican parties. Moreover, the two arch enemies of economic freedom, the Washington Post and the New York Times, then both supported the idea of a flat tax. And so we said, this is great, it's time for us to make some money, let's write a book. We wrote a book, and the book was called Low Tax, Simple Tax, Flat Tax, because the tax was low, simple, and flat. We sold quite a few copies adopted by book clubs. And right after it came out, the subject died down. For some reason, as we were ready to sell these books, people stopped talking about the flat tax. Well, then what happened is we had the second term of Ronald Reagan, and he became interested in this idea as another way to push the Reagan Revolution. So we decided we would issue another version of the book, but we learned something very important: keep it simple. So we simply called the next book The Flat Tax. It's too hard to keep three ideas in mind: low, simple, flat. Now, you may think I'm joking. When you want to market an idea to the broad public, the simpler the better. So we since then called the book The Flat Tax. It's gone through two more iterations. In 1986, against all odds, Reagan passed his Tax Reform Act, which had only two rates, 15 and 28. But two rates really are not stable. Anybody who thinks you can have two rates for very long, it turns out 3 years later there's three rates. And then you go to bed one night and then there's four rates. So one rate matters, but the minute you start adding rates to it, it seems to disappear and more rates are added to the system. So after this passed, the flat tax movement died down, but we were very lucky. The Soviet Empire collapsed. Because without the collapse of the Soviet Empire, we might have had a stalled revolution. But fortunately, the system was rotten and ultimately crashed. And all these new independent countries cropped up. And among them was a young 32-year-old Prime Minister of Estonia, Martlar, who read Milton Friedman's book, Capitalism and Freedom. And our book at that point was available to people. And so Estonia began to lead this new revolution. And as you can see from the table I've set from it, thereafter it was one country after another. Now the revolution took a very interesting form. Estonia, Latvia, and Lithuania very quickly in succession adopted one or another variety of the flat tax. But if you look around at other countries, Russia had 3 brackets, and I'm not sure Slovakia had 5 brackets, and other countries 4 brackets. And it turned out that the Baltic countries had a much quicker, better reform result. And then, very important, Russia decided to move in the direction of the flat tax. And once again, this was almost an accident of history. A young man named Andrei Illarionov, who headed a statistics institute in Moscow, came visiting at Hoover, and I introduced him and at a conference, at a seminar, and I gave him a copy of my book, and he said, that's very interesting. He went back to Moscow, and he and Boris Federer approached then President Yeltsin when he wasn't drunk, and said, let's do a flat tax. But all of the oligarchs and the others who didn't pay any tax didn't want a simple flat tax that could be enforced. So fortunately, Yeltsin stepped aside and in came Putin. Putin appointed only one presidential economic advisor. It was Andrei Illarionov, and he said, let's do the flat tax. So Andrei asked me if I would come and talk about it, and I said no. He said, why not? I said, because it has to be your flat tax, not my flat tax. It has to be seen as a Russian idea, not a foreign idea. So he said, okay, and a month later, Russia had its 13% flat tax. And the revenue doubled the second year and doubled again the third year. So all of a sudden, we have a big country. Now, why was this important? I kept talking to people in America and elsewhere about the Baltic states. But, oh no, Estonia has 1.5 million people, and Latvia has 2.5 million, and Lithuania has 3.5 million. And I said, well, how about Guernsey and Jersey? Jersey has Jersey cows, Guernsey has Guernsey cows, And little islands with cows can't be compared to a big country. Then finally Russia, it's a big country. Oh, that's a problem. If it works in a big country, maybe it'll work in every country. So the Russian case was very important simply because it established the principle that a large country could introduce a flat tax. And it worked much better than the previous three-rate system of 12, 22, and 30. In fact, it got to the point where Russians would even have pictures taken of themselves writing very large checks to pay the 13% flat tax. And it helped, of course, they threw a few oligarchs in jail and a few others left the country, and all of a sudden Russia started paying taxes. Well, then many of you know the history of a lot of these other countries. And it got to the point, fortunately, that after Slovakia introduced a flat tax, we now had two very clear, good examples that you could show to the rest of the world, at least for me. So I've been contacted by a number of countries in Latin America, Middle East, Africa, and elsewhere. And they always ask if I can help them with the flat tax. And I say, I have a better idea. Let's see if you're really serious. I suggest you do the following. Take a team of 3 or 4 people, your finance minister, your treasury consultant, a leading politician, one of your economists, and you take a trip for a week. You spend 3 days in Estonia, you spend 3 days in Bratislava. You speak to the various government officials who were responsible for implementing the flat tax. Then you speak to the people of the treasury who've implemented it and recorded the treasury flows. And if you don't want to do that, why not invite them, send them a prepaid business class ticket, have them come to your country? Because at this point, we now have some successful examples of countries with real world experience that have had a great success. And I no longer have to give you the theoretical argument to explain why it's a good idea. You can have people who've done it tell you that in fact it works, and it worked better than their other previous graduated tax systems. And so anytime a country will do that, then fine, I'm willing to help you. But it's much better. Now, what I'm going to have to do is swap Slovakia with another country, perhaps Bulgaria, mainly because I don't want them to come here and then have the politicians say it was a bad idea, so we got rid of it. We're going to have the resurrection and the reinstatement before I can put Slovakia back on the itinerary. So for the moment, we're going to have to put Slovakia in cold storage and remove it from the grand flat tax tour of the world. Anyway, that gives you a little bit of history, a combination of Hong Kong, of President Reagan, of the Wall Street Journal. And I should mention also one other thing. In 1981, there were 3 national newspapers and 3 television stations. So if you could get your idea endorsed by the Wall Street Journal, the New York Times, the Washington Post, you had every major media in the United States supporting it. The Economist magazine supported it. Some of the British papers supported it. Never the French. Some temporary support in Germany, very temporary. And some of the other European countries in the West which have unfortunately been unable to produce elections with politicians who want to push the idea. But today, it's much more difficult because you have the internet, hundreds of cable shows, YouTube, 1 billion posts a day in the blogosphere, or what I call the chattersphere, from Twitter and YouTube and just web pages and commentaries and so forth. But that also means you have the chance to tweet about the flat tax every day and post a Facebook page about the flat tax every day. And it will be important for someone in Slovakia to do this every single day. Every day there has to be a steady, ongoing discussion of why it was such a good idea and how well it worked. Now, what I want to do then is just very briefly highlight what it is about the flat tax that makes it so attractive for a variety of reasons. What I've discovered in talking about it for 30 years is that different people have different reasons for liking it. If you talk to professional economists who are open-minded, they will like it because it has economic efficiency. You have optimal resource allocation. Whereas graduated tax system with lots of loopholes and deductions and credits and exemptions misallocates capital, misallocates labor, misallocates natural resources in favor of those that are tax preferred and against those that aren't. And it produces a politics of special interest constantly trying to increase the benefits they have or add new benefits through the tax code. And so, in effect, we have the tax base that's eroded anywhere from a third to a half by all of this. And as a consequence, we have very high rates. So, economic efficiency is a very good reason. A second reason, which I found in the United States and other countries to persuade the idea, and it varies from country to country, is simplicity. The beauty of the flat tax is simple because it can all be sold on a postcard. In our book, we have 2 postcards, 10 lines for a business tax and 12 lines for a personal tax. That's all it needs. And these lines are relatively self-explanatory, and you need a few pages of regulations to clarify certain items. But other than that, the U.S. tax code is 10 times longer than the collected works of Shakespeare. It's 10 times longer than the Bible. It's basically about 66,000 words, but it's not as long as the German tax code, which is twice as long as the American tax code. But you see, you can have a lot of mischief when you have a complicated tax code. Second thing is, a simple flat tax is easy to administer, and it's relatively easy to collect. And if the rate is low, people are less reluctant to avoid it or evade it. And if everybody pays the same rate, then most people are willing to pay it. I usually ask the audience a question. If you live in a nice neighborhood and children are playing in the street, and a car comes down the street very fast, doesn't stop at the corner, and some child may be hurt or barely escapes being hurt, your inclination is to report the driver of that car to some authority to protect the lives of children. But if you live in a neighborhood where you find your neighbor has found a very effective way to get around the tax code, will you call the government and say somebody's cheating on his taxes? No. Most people will say, how do you do it? Please show me how. And that's a standard answer that everybody will give. So what the tax code does when it's complicated at high rates, it turns all honest, law-abiding, decent people into criminals. We become criminals because of the tax code. It's either become a criminal or be extorted by a government engaging in racketeering and extortion to collect money to give to other groups, taking your money for some other purpose than one you would value. So I think in this particular regard, by knowing everybody is subject to the same tax system at the same tax rate, we can take criminals and make them honest people again. And that's exactly what happened in Russia. A lot of criminals became honest people. So in some sense, a low, simple tax system has a moral foundation because it will keep people honest, keep government officials honest. There's no way to bribe government for special favors because everybody's subject to the same low rate. Okay. A third thing is, and I think this is very, very important, which is beware of anybody who wants to achieve social goals through the tax code. Because there's more social goals than money. So we have to imagine that the tax code is a very simple way to collect money. But all programs conducted by the government need to be openly discussed, debated in a Congress or a Parliament, where the people have a chance to hear candidates discuss them, and voted on openly in the budget. The reason politicians like to give benefit through the tax code is they're harder to find. You have to look in the tax code to see a benefit. But if it's a line item in the budget, it's very easy to see and often easier to resist and oppose. So the more items you can put in the tax code, the more government can grant benefits. So in this regard, one should only think about the tax system as a basis for revenue, not as a way to encourage or discourage certain kinds of activities. Now, I have a section here called features, but I want to pull out of that something that's very, very important. Because the number one argument against the flat tax that's made everywhere in the whole world consists of 3 words. It's not fair. I hope 3 words in Slovak as well as English. It's not. Why is the flat tax not fair? The idea is that upper income people, rich people, should not only pay at least the same rate, but for each time the income goes up, you should pay another higher rate, which is what's just going to happen here in Slovakia. And this argument is today the defining characteristic of the American election. If you watch the debates, if you watch the American press, President Obama and the people around him pay just a little more. Millionaires and billionaires should pay just a little more. And if you ask, how much is a little more? Please tell me the number beyond which it will stop. No one ever gives an answer. Never. Not once. And the reason for that is, when you get a little more, there's always room for a little more. So, take Reagan, 28%. The first George Bush, 31%. President Clinton, 36 and 39.6%. Well, the rates came down 20% across the board, 10 to 35, but now we should take those rates of 35 and make them pay just a little more. But as you know, there's some countries where 40% isn't enough. The Scandinavian countries for a while thought 60% was a nice rate. But you will never find anybody telling you what is the maximum top rate ever. Now, the second point of fairness, I think, is equally interesting. There's about 180 jurisdictions with a personal and business income tax in the world. What I find interesting is that no 2 are exactly alike. Either the allowance is slightly different, or the characteristic of the flat tax is slightly different. But as important as that, in the United States, we have had since the beginning of the income tax probably 8 or 9 different variations of it. Rate went up, the rate went down, the rate went up, the rate went down, the rate went up, 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 down, and then up, up, okay? We also have in each variation different exemptions, different benefits. Same is true in other countries. So if you will take 100 countries, maybe with an average of 3 or 4 different systems, you will find anywhere from 3 to 4 to 500 different examples of income tax systems in different countries at different times. You tell me which one is the most fair, right? Can you find one that any 2 people will agree is the most fair? Or let's just simply go to any one of the countries that's had different income tax systems in its history. You tell me which one of those is most fair. And then you promise on a blood oath in which you will commit hara-kiri, suicide, if the rate ever goes above some rate that's too high. There's no such rate. So the problem with fairness is that it's very easy for the opponents of the flat tax to say, it's not fair because you're giving rich people a tax break by lowering their rate, and it means you must raise taxes on everybody else. That's not true. As an economy grows, everybody's after-tax income increases. Now that sentence is very hard to run in a campaign, so you have to find a way to do that too. But as soon as you begin to defend the flat tax against the simple charge it's not fair, you need 50 words, 100 words, 5 minutes, 10 minutes. You don't get 50 minutes or 10 minutes. You get 17 seconds on television. In an advertisement, you get 25 seconds, 30 seconds. So it becomes an increasing difficult to defend the flat tax when its critics simply say it's not fair. The rich get a big tax cut. So the point is, I want you to think long and hard about fairness, And I want you to be able to explain why the flat tax is the fairest tax of them all. Because apart from an exemption, which is, except for Georgia, personally necessary to get it adopted anywhere, any tax increase will affect the entire population in the tax net. So you have a constituency opposing tax increases. But if you have more than one rate, we always say just that top 2%, just that top 5%, just that top 1%. Okay. Well, anybody who promises to rob Peter to pay Paul can usually count on Paul's vote. So you have to set up a system where Peter cannot promise to rape Paul to buy votes. And with the flat tax, he cannot, because everybody has to pay the same percentage increase. Now, when I talk about the Hall-Rabushka flat tax, it's not a pure flat tax because it does have a personal allowance. And thus, you can do the calculations. You see it has a measure of progressivity because up to the tax-free allowance, the rate is 0. Then we would have 19 or 20%, but actually I like Eastern Europe with 10% better. Unfortunately, we have a big government, very hard to get it down below 19 or 20% if it were to be adopted. So apart from that, in our ideal tax system, we want to have 100% first-year write-off of all business investment, or what we call expensing. And what that does by taking investment out of the tax base, it converts the tax into a consumption-based tax. And virtually every economist, left, right, and center, agrees that a tax base which excludes investment will enhance investment and thus produce over time more economic growth and thus produce over time more jobs and rising after-tax income. Now, some of the other items that I've listed in here, as you can see, one needs a broad base and a low rate. The flat tax will encourage investment. And another point, if you look at whether it's the American legislation or the European Union rules, you see that these rules preclude discrimination. It's no longer legal in most countries to discriminate on the basis of race, sex, gender, religion, handicap status, and so on. So why should it be okay to discriminate on the basis of tax? It seems to me odd that what we do is discriminate every minute, every day on the basis of who should pay what tax. At the same time, these international institutions have all these prohibitions on other forms of discrimination. We should have equal treatment of equals in that regard, and thus the flat tax eliminates discrimination. And eliminating discrimination is good. Everybody agrees that. So that's another benefit to explaining the virtue of the flat tax. It reduces corruption for two reasons. Number one, the rates are low. When the rates are 50%, if you cheat $1, that's terrific. But if you earn $1, you keep 50 cents. It's more lucrative to cheat than to pay tax. But if the rate gets down to 20%, the ratio changes. You only save 20 cents or 20, whatever the unit is, on the dollar or the euro. And at that point, people, it's just as well, let's pay the tax. I've been told by many company presidents that a rate of 20% or below basically removes taxation from consideration as part of economic planning. In the worst early part of America under Jimmy Carter, where we had very high inflation, very high interest rates, every corporate CEO had two people sitting on his side. The first person was the economic analyst who said, these are the economic conditions, these are the business conditions, and this is why we should invest. And over here was the tax analyst who said, no, you can't do that, it'll cost you too much money. Maybe you should do this, it will cost you less. And the economist would say, but then you won't make as much money. And the tax guy would say, yeah, but if you make it, you don't get to keep it. So there was a constant fight between the tax considerations and the economic considerations. With a low flat tax, we throw out the tax man, you pay 15 or 10 or 20%, and you focus more on the business situation as a way to maximize the growth of it. Sole proprietorship, a partnership, a corporation, or any other form of doing business. Another thing the flat tax is eliminates double taxation. Some countries have done this, others have not. So any business that pays a tax, when the dividends or the interest are paid out, those are already free of tax. And by the way, capital gains, if you look very carefully at the national income accounts, capital gains are not included. And since we want to tax income, there's no reason to tax capital gains, but capital gains are also a second taxation. Because if a business pays tax on its rising profits, a rise in the value of the stock is simply a claim on the increased future earnings as reflected in a rising stock price. So to tax the capital gain of a stock is a double taxation on a single stream of earnings. So by full integration, we get rid of double taxation. And then finally, we equalize debt financing with equity financing. Now if you go borrow money, it's deductible. So you load up on debt. But if interest isn't deductible and dividends are not taxed a second time, you equalize the treatment between debt and equity. And I think the world would be in a much better place today if we had accumulated more equity and less debt, particularly in the financial sector. So I think that's a short list of the relevant features. I think these need to be thought about. Some of them may play a more important role in sustaining or promoting the flat tax in different countries. So not all of them are equally important in marketing the flat tax or defending the flat tax, but they're all available to be used depending on the particular audience or the set of politicians. I'm going to wrap up here with a few more minutes and then we can take some questions. Who's opposed to the flat tax? Well, unfortunately, the people who know better, the worst group are the professors of economics in all the universities all over the world. Because pretty much they're all, except for a handful, dedicated to Keynesian economics, which calls for lots of government spending to stimulate the economy and create jobs. A lot of them really do love Karl Marx, even though they deny it. A lot of them still cling to the labor theory of value, not allowing any room for entrepreneurship. In fact, in most economic models, there are no entrepreneurs. If you look at all the mathematical models that make up modern economics, I defy you to find any people in them. There aren't any. So, in some sense, there needs to be some way to understand that really economic activity depends in large measure on the activities of individuals and entrepreneurs. And entrepreneurs often create things that you can't put into a model. Everybody in this room probably is a victim of Steve Jobs' global imperialism, because everywhere I go, I either see iPhones or iPads or substitute versions. So opposition often comes from those on the left. It's ideological, and then of course there's always political parties. And I remember having all kinds of discussions with politicians from socialist parties in Europe. And they always say, you Americans have this Darwinian dog-eat-dog capitalism. The population is homeless, living under the bridges in Philadelphia, and you starve your poor people, and it's a terrible country. We have a social market economy, and we have social justice, and everything works just fine, or at least it did work fine until a few years ago. And now it may not work anymore at all. The only question is which day it stops working. So between the intellectual support and the media support and the politician support, usually the people that are promoting and defending the flat tax is a small group of businesses who basically hire people, pay their wages and salaries. And I never knew an economics professor that offered me a job. It might be a university. Unfortunately, all my life I've worked in private universities. I want to establish one last bit of hope and optimism here, because as I told you, I keep track of everything that happens in the world on the flat tax. So let me bring you up to date on some recent developments and how this list may grow in the next few years. Last June, the country of Armenia, again, a little small country, reformed its income tax. It came this close to a flat tax. For 95% of the population, they have a tax rate of 24.4%. And then for a very, very, very small group of people in the upper income, 26%. 24.4 and 26. a gap of 1.6. So Armenia is right on the edge, if we can just maybe split the difference between the two, of taking Armenia into what I would call the world of the flat tax. Now, a number of countries have taken steps which I believe have a great possibility of leading to the flat tax replacing their otherwise complicated, detailed, graduated tax rate systems. For example, this past April, the government of Malaysia enacted what they called a preferential 15% flat rate tax. Any citizen of Malaysia who was working abroad, if they come back to Malaysia and they have a high-tech background, gets a preferential 15% rate for 5 years. Now, you think only 5 years. But there are very few things as permanent as temporary measures. And something like 5 years will then become 10 years, because if it isn't extended, those people will threaten to leave. So I believe once the Malaysian people see that these returning people are getting 15% while they themselves pay 35 or 40, it will produce the political pressure across the board for a 15% rate. Then another country, which is Malta, it established a non-resident 15% flat tax to encourage the development of Malta as an information technology center and as a center for skilled people from around the world to come in and help diversify and modernize the economy. This is applied only to people who are in 75,000 euros or above, but once again it sets in a motion where people who live in Malta who earn that will want the same tax rate, and then the pressure will be to drop it from 75,000 to 60,000 to 50,000. So I think Malta has taken a very big and important step moving in the direction of a flat tax. Now there's another little place that surprises you when you look at the details, this little country of Andorra that sits between Spain and France, and it turns out while it's a tax-free shopping center, they do have an income tax. And it turns out to be rather complicated and steep. They've now introduced a non-resident 10% flat tax. And again, once this thing takes hold, you build up natural momentum. We talked earlier about some of the Swiss cantons have a flat tax, some of the Canadian provinces, and some of the American states. So it sits there and it's constantly bubbling and percolating. But this movement toward these returnees or these non-residents moving to places. So I think I see, despite Slovakia's temporary, I should say, demise of the flat tax, the movement is still spreading and the movement is still growing. So I remain optimistic, I remain hopeful, and hopefully soon, another election from now, I can put the flag back on top of my desk. So let me stop at this point. We've got 15 minutes, I think, for some questions. I don't have an earphone, so I can go, maybe I should sit at the table there and take the questions there. So if anybody wants to ask in any language other than English, we can proceed that way.
In Chinese.